Here we're going to take a quick look at South Carolina tax returns. Of course, if you're doing tax returns, they're going to involve an IRS return, but oftentimes you'll also have to do a state return for that individual, or sometimes more than one state. You have to know the various laws of the states that you are working returns for. So we're just going to take a quick look at South Carolina. I'm here at their website, sctax.org, and we're going to take a look at the individual tax return. So we can go several places. You can go into Individuals tab over here and find out some information about them. We're going to take a quick look at the forms. When I click on the forms, it's going to give me a variety of forms. We want to look at the individual income tax form. As you can see, there's lots of different taxes that run through the South Carolina Department of Revenue. Okay, when I click on that, it brings up all the individual tax forms for South Carolina for this year. And you can see that there are tabs along the top for other years if you need them. Here's a tax packet, general instructions, and the actual South Carolina 1040 instruction booklet. So this would be the instructions that you would want to download. The actual tax return itself is the SC 1040. We're going to take a look at that. Occasionally, someone may qualify for South Carolina credits. They're not as common to qualify for credits in South Carolina as they are for the IRS, so you may not. South Carolina tax tables are here as well. So we're going to take a look at those in a minute. Notice that if you're not somebody who lived in the state, but you have to file a South Carolina return, there's a non-resident schedule and non-resident schedule instructions. These are for out-of-state people. Okay, this SC 1040V is a voucher. If you owe money to the state, you have to fill out this 1040V. Just as you would for the IRS. If you owe money, you have to fill out the 1040V. Here's the amended 1040. All right, and here is the 1040ES, which is for estimated tax payments that self-employed people would have to send in. So let's take a look at the SC 1040. Here we have up at the top the Social Security numbers. Go in there. Last name, your first name and initial, and then the last name over here, spouse's name, mailing address. Okay, then down below, check this box if you're filing SC Schedule NR. That's the non-resident. For somebody who was either here only part of the year, or who did not live here at all, but for some reason has to fill out a return in South Carolina. Check this box only if a composite return on behalf of a partnership or S corporation. That is not going to apply to anything we do, so you can leave that be. Check this box if you have filed a federal or state extension. Of course, we know that the federal return is due by April 15th. And most states allow you, if you have filed a federal extension, then you automatically get a state extension as well. If you don't file for the federal and you only want an extension for the state, then you have to usually file a piece of paper. But again, each state is different and you would have to know what that state requires. South Carolina does allow for an extension, an automatic extension, if you had a federal extension. Once again, however, an extension is an extension to file the paperwork. It is not an extension to pay. If you owe money to either the federal, to the IRS, or to the state of South Carolina, you are required to pay by April 15th, or you will get penalties and interest. Finally, check this box if you served in military combat zone. That does allow you to pay late and certain other things. Okay? Check this box if the return is affected by a federally declared disaster area. Okay? Check your federal filing status. In other words, you cannot choose a different filing status for the state. You have to choose the same one that you did for your federal return. The number of exemptions from your 2014 federal return, so you just write however many exemptions that you had there on your IRS return. But then they have these two other separate things. The number of exemptions listed above that were under the age of 6, and the number of taxpayers 65 or older as of December 31st of 2014. So if you had 4 exemptions and one of them was a child that was 5 years old, you would have 4 on this first line and a 1 on the second line. And if nobody was over 65, you would have a 0 there. Your dependents, first name, last name, social security number, relationship, and date of birth are listed. And that ends page 1. We get to page 2, and it starts with federal taxable income from your federal form. So in other words, you have to complete your federal IRS form 1040 before you start in on the South Carolina form. Some states start with the federal AGI, and some states start with the federal taxable income. So be careful that you're looking at the right number. In 2014, the taxable income is line on line 47. Okay. Then there's various additions to that federal taxable income, and then there's various subtractions. So they're making adjustments, both plus and minus, to your federal taxable income to get down to a South Carolina taxable income. Okay, here's letter A, state tax add back if itemizing on the federal return. This is where if you itemized and you filled out Schedule A, you were allowed to take an itemized deduction for your state taxes that you paid. And if any of that was South Carolina state taxes that went on your Schedule A, and you got to deduct those as an itemized deduction, you now have to add that back. They're not letting you have that as a deduction. Okay? Some of these may apply out of state of losses, expenses related to National Guard and military reserve income, interest income on obligations of state and political subdivisions other than South Carolina. These are municipal bonds, and we talked about how for the federal return, municipal bond interest is exempt, and we put it on line 8B of the IRS 1040. Here it's saying if that municipal bond interest was from anywhere in South Carolina, well, then it's okay. But if it was from some other state, then you have to add that back. We're not going to let that be a deduction. Okay, then you add up all your additions, and then you add those additions to the taxable income from line 1, and that's what gives you line 3. Now we'll take a look at the subtractions. Letter F, state tax refund if included in your federal return. If you itemized in 2013 and then got a state refund in 2014 from your 2013 state tax return, you had to include it on your IRS 1040 as income in 2014. And if you did that, then you can now subtract it back off. It would have been on line 10 of your federal 1040. And if you have anything there, then you can now subtract that back off on F. total and permanent disability retirement income if it's taxed on your federal return. Some disability income is taxed and some is not. If it is taxed on your federal return, then here you can subtract it back off. Out-of-state income or gain can be dealt with. 44% of net capital gains held for more than 1 year, so long-term capital gains. Volunteer deductions, and so if you're one of these, firefighter, you work for DNR, etc., or I mean, you're not that you work for those, but that you volunteer for any of those, then there are deductions for that. Contributions to the South Carolina College Investment Program, Future Scholar Program, or SE Tuition Prepayment Program. Active trade or business income deduction, interest income from obligations of the U.S. government. So if you invest in United States bonds, then the United States government gives you interest, and that is not exempt on your federal 1040, but here we can subtract it back off again. Social Security and railroad retirement is taxed on your federal return. So if you had any of your Social Security benefits that were taxable on line 20 of your 1040, then now you can subtract them back off again. Retirement deduction. Here you can get $3,000 deduction out of your retirement income. If you're over 65, if you're 65 and older, you get $15,000 deduction for each person that's over 65. So South Carolina is very generous with retirees and elderly people to be able to give them those kind of deductions. Negative amount of federal taxable income, so if you have a net operating loss, that would go there. Dependents under the age of 6, you get a deduction for that, and you can look in the instructions. It changes year by year. Okay, so here you would add up all your subtractions. You would subtract that from line 3, and here is your taxable income for South Carolina on line 5. On line 6, here is where you will enter the tax from the South Carolina tax tables, and we'll take a look at those in a minute. You're probably not going to have anything on the rest of these, and so line 10 should be the same for you as line 6. As far as some of these credits, the 2-wage earner credit is a fairly common credit in South Carolina. If you have a husband and wife that are working, that are both working, and they both have W-2, then they can get this 2-wage earner credit, and that can be helpful. The other credits are not as common. You could take a look at the instructions and see if any of them apply to you. And so generally, if you have something on line 12, that would also be your total on line 14, and you would subtract line 14 from the tax that you had on line 10 to get tax here. And these are non-refundable credits, so line 15 cannot be less than 0. Here we go to page 3. Line 16 is your South Carolina income tax withheld from a W-2. And so if you are sending this tax return in by paper, you would attach the W-2 to the front of the tax return. If you have any withholdings from a 1099, like a 1099-R from a pension or something, then that withholding would go over here on line 20. Okay? If you were self-employed and you paid estimated tax payments, that would go on line 17. If you paid any with your extension request, that would go on line 18. Okay? And then you would total all your payments up and your refundable credits. Again, they're not very common. You can look and see if there's anything that might apply to you. Then, just like with the IRS, we take a look and see, here's our total payments and credits, and back on page 15 was the total tax that we owed. So we're going to compare those things, and if we paid more in than what we owed, then we have an overpayment on line 24, and we would bring that down to refund on line 30. If we paid in less than what we owed, when we have an amount due, that would go on line 25, and then again on line 34. Some of these other columns, line 26 is for use tax. If you purchase things through the internet or mail order type of deal, and they come directly to your house and no sales tax was charged on that thing, you're supposed to add up all of those purchases and put the total of those purchases there on line 26. Well, the actual tax on those purchases. And you can look in the instructions basically the use tax is the same as the sales tax from the county that you live in. So in Orangeburg, that would be 7%. And so you would add up all your internet purchases, multiply that by 7%, and that is your use tax that would go on line 26. If you are saying that you purchased absolutely nothing on the internet or from out of state that you didn't pay a sales tax on, then you would have to check here on this box, and that's you making that statement. And if it's found out that you lied, then they would have that right there in your own handwriting that you said that you didn't have any of those things. Line 27 is if you want some of your refund to be applied to 2015's estimated tax. If you were self-employed, you might want this. Okay. Here's a spot where you can have your refund sent to your bank account. Okay. And here's a spot for penalty and interest if you owe those things, which you would if this is past April 15th and you didn't pay what you were supposed to pay. Or if you were self-employed and you were supposed to pay in estimated tax payments and you did not pay those through the year, then you would owe penalties for that as well. Down at the bottom of page 3, you're going to sign, the spouse signs and dates. They would like your email. Here is where you can check yes or no that you will allow the Department of Revenue to talk to somebody with the tax preparer. Okay, and then the tax preparer prints their name and signs the return. You must sign here and on the IRS 1040 if you have taken money to do a tax return, no matter how little. If you have taken money or have received some other benefit in exchange for doing that tax return. If you do the tax return for some relative or friend for free, then you do not sign any return. At the very bottom, it shows us the addresses. It says if this return has a refund or doesn't have any tax, it's just a zero return, then you send it to this address in Columbia. But if there's an amount due, then they say have you send it to a different address, because that's one that will process the checks or whatever that you're sending.